Now, in the technical analysis, the first and foremost thing that we understand that how a particular prices of a particular stock or a company is represented graphically, so that in the chart format, so that we can understand the prices of the companies on different time frames, and hence we can do the analysis for it. For example, for a particular day when the stock market starts, say at 9:15 a.m. IST, and it gets closed at 3:30 p.m. IST, then the opening price of that particular company's stock price at 9:15 a.m. is called open price, and the closing price at 3:30 p.m. is called the closing price for that particular day of that particular company. Now, during the entire day, the price gets fluctuates. It fluctuates. So the highest price that it reaches during that particular day is called the high price of that day, and the lowest price it reaches is called the low price of the day. So you are getting four price points, right, in a particular day. One is open price, second one is close price, third one is high price, and the fourth one is lowest price, right? So this is called OHLC, open, high, low, close price technique. Now, this OHLC, when you represent it in the graphical format, you can either represent, you can represent in different ways. So, one of the way of representing this particular OHLC of a particular stock price or a particular company on a particular time frame is called a bar representation, or a bar diagram, or maybe it can be represented in a special form which is called a candlestick format. So I'll show you that right away. Now I'm going to show you that in the tool called Trading View, that what we have discussed so far about the candlestick and the OHLC price techniques. So I'll go to the Google search, or google.com, or whatever the browsers you have. On the URL, I'll type for www.tradingview.com. So this will open in your own browser under your own account. Now I'll go to this menu, and then it's products, then the super charts. See, this chart has opened. Now, by default, it has taken that index that we talked about, right? Nifty 50 index. So this is one of the most important index that we have in our stock exchange. As you know, that we have two stock exchanges primarily that we work actively. One is the Bombay Stock Exchange, or BSE, and another one is National Stock Exchange, that is NSE. And there are other stock exchanges as well, like MCX and all the other things. But we mainly work on these two stock exchanges. Now, this Under the stock exchanges, you can see that there are many indices, that has been created by the stock exchange. The important indices are Sensex, which actually consisting of all the top companies that is listed under BSE, Bombay Stock Exchange, and Nifty is consisting of top companies which are listed under the National Stock Exchange or NSE. So if I click on Nifty in the trading view, then this particular chart will appear. Now, if you see that all the red and green, these are actually called the candles. Now, see, these are is looking like a candle, right? Now, if I open up, or if I enlarge and see that any of the candle, let me open up and see the candle. I mean, rather enlarge and see the candle. You will notice that this candle, we have. Let me open further. Now I think it's visible, right? Okay. Now, if you see that here, let us take the last candle, right? Last candle, you can see that this candle is red, and this has a kind of a the upper heads and the lower tails, and the body, which is a little bit thick, is called the body of the candle. So for a red candle, it means that the open price, where it started, the close price is less than open price. That means here open price is this one, that starting of the body, and close price is the ending of the body, and the high price is the head of the entire candle, this one, and the low price is the tail, this one. Okay, so this is OHLC representation in a candlestick format. I hope that you have understood. Let us go back to the PPT once again. Now you can see those bar chart and candlestick chart are also shown in this presentation. I hope that it's as clear to all of you now. Now, coming to the next point of the technical analysis is understanding the trend. Now, trend is that if you uh, take or look into the stock prices of a particular company or a stock, or maybe the index. So during the duration, whether the actual trend of the stock price from the beginning of the period to the end of the period, so how is looking like? Is it looking like it's upward? If it is upward trend, then it's called uptrend, and the market is called bull market. If the overall trend is downwards, then the trend is called downtrend, and the market is called bear market or bearish market. Now I'll tell you briefly about the technical indicators. In stock trading, a technical indicator is a mathematical calculation based on historical price, volumes, and other data. These indicators are normally used to forecast the price movements, also to understand the historical price movements as well. and that helps traders make informed decisions. A few of the examples of technical indicators are relative strength index RSI, and MACD, or moving average convergence divergence. These are very two important indicators, and we normally use these indicators frequently in our technical analysis.